18.
Hello and welcome to Startup Street. I'm Shruti Mishra and these are the top headlines from the startup space. Process, the parent company of fintech major PayU, terminates the proposed acquisition of BillDesk for $4.7 billion, saying certain conditions were not fulfilled before the September 30th deadline. The deal would have been the second largest in India's internet economy and would have created the country's largest online payments entity. Enterprise-grade blockchain startup XDC Network receives $50 million from LDA Capital. The founders of the XDC Network have leveraged a portion of their personal token allocations to secure the capital to accelerate the expansion and development of Layer 2 projects across the ecosystem and to facilitate network adoption and real-world utility. Neo-banking platform Vance raises $5.8 million in a seed round led by Hummingbird Ventures. The round also saw participation from Global Founders Capital, Y Combinator, Soma Capital and others. Vance plans on going live in the UAE and UK by the end of 2022. Wow Momo Foods launches 3 of its outlets in the metaverse. The brands are on a new metaverse platform called Festive that curates festivals of India across the year. The brand aims to start trading from their metaverse stores. Consumers can trade on metaverse stores and convert NFTs and redeem it on physical outlets. Tencent is resetting its M&A strategy to put more focus on buying majority stakes mainly in overseas gaming companies as the tech giant eyes global expansion, Reuters reported. It is now aggressively seeking to own majority or even controlling stakes in overseas targets, notably in gaming assets in Europe. Google shuts down the Google Translate service in mainland China, citing low usage. The move marks the end of one of its last remaining products in the world's second largest economy. The dedicated mainland China website for Google Translate now redirects users to the Hong Kong version of the service. However, this is not accessible from mainland China. Well, those are the headlines we are tracking for you this evening. E-commerce players in India witnessed a growth in demand for this festive season, according to data from Unicommerce. Now, the sector has seen a 35% growth in sales for this festive season as compared to the same time last year. The highest contribution to the festive sales came from the personal care and electronics segments, accounting to over 60%. Shilpa Ranipeta joins in with the key takeaways from the festive sale. Shilpa, what are you picking up?
Well, e-commerce platforms have seen better than expected sales in the first leg of the festive sales, and over 60% of the orders came from tier 2 and 3 towns. Now, this is what data by Unicommerce had shown. Now, while the overall personal care and electronics led the growth, it was followed by FMCG products and then fashion. Now, e-commerce apps like Myntra, Flipkart, Meesho also have shared some stats on how their respective sales went. So, Myntra said that it saw over 1.2 million new users, the highest ever, shop from its platform, with beauty and personal care and watches and wearables driving demand. It also sold 189 t-shirts, 115 shirts and 61 tops every minute. Now, Flipkart, on the other hand, saw over 1 billion customer visits on its app, again the majority from tier 2 and 3 markets, and it also sold 3 saris and 2 kurtis every second and about 250 shoes every minute. Now, while electronics at the same time grew about 20%, over 50% of the mobiles that were sold on Flipkart were those costing over 20,000 rupees. And overall, most consumers picked EMI constructs to make purchases. Meesho, whose focus was tier 2 plus markets, saw 3.34 crore orders being placed, led by kitchen utilities, personal care, fashion, among others. Now, this also made over 20,000 of its sellers Lakhpatis and over 24 crore-patis. Now, meanwhile, Amazon's Great Indian Festival sale is yet to end, so we don't have data from there yet. But Redseer had indicated that overall $3.4 billion were clocked in all the sales across platforms in just the first 4 days. And these are on track to clock over 11 billion this festive season, as more sales are set to happen in the run-up to Diwali. Back to you.
Thank you, Shilpa, for those details. Appreciate you joining us on Startup Street. Moving on the hot seat today, we put the spotlight on farm-to-consumer brand Deep Rooted. Currently operating in Bengaluru, Hyderabad and Chennai, Deep Rooted provides urban consumers access to quality fruits and vegetables sourced directly from farmers. The venture claims through its greenhouse network, Deep Rooted can deliver a year-round supply of fresh, residue-free produce using a fraction of the water and land compared to conventional farms. To tell us how and also to talk about the road ahead at Deep Rooted, joining me now is its co-founder Avinash B R. Avinash, welcome to Startup Street. Now, Deep Rooted is a one-stop shop for fresh produce. I believe it offers over 200 varieties of fruits and vegetables. If you could take me through your asset-light business model, and most importantly, how are you ensuring transparency and trust both with farmers and consumers?
Thanks for having me. Yes, at Deep Rooted, we are building India's leading fresh produce brand. And we are trying to do this by redefining the way how fresh produce is grown, handled, and delivered to end consumers. As you rightly said, our business model is an asset-light business model. We work with farmers who have greenhouses and open field land. The current challenge that they are facing is sort of threefold, right? Not knowing which produce to grow, inability to grow the produce by getting the right yield and productivity for a multitude of challenges. And thirdly, the ability to market all of the produce that they are growing. This is the problem statement that we are solving for the farmer by actually taking the urban consumer demand, who today are discerning about the choices that they make, right, in terms of their dietary needs, what they want to eat, right? So we take this demand to this network of horticulture farms, which today is already over 1,500 acres across the 3 cities that we are operating in. And we offer agronomy service to them, right, which means we tell them the seed to use, how to grow the crop in a contamination-free manner, ensuring yield and productivity for the farmer, and year-long, consistent, high-quality, contamination-free produce to the end consumers. So in this farm-to-consumer model, we have 2 equal stakeholders, if you will, farmers and consumers. And our value creation is to both ends of the supply chain or the spectrum, so to speak.
All right. Avinash, you also claim that through your greenhouse network, Deep Rooted can deliver a year-round supply of, fresh, residue-free produce using a fraction of the water and land compared to conventional farms. Tell me, how are you doing this? Also, what is the kind of impact this has had on the livelihood of farmers, plainly speaking, monetarily?
Sure. As I said, I think that we are solving sort of 3 inefficiencies for the farmer, right? One is we are telling the farmer to grow a produce that we know we'll buy from the farmer. So that itself solves a lot of the inefficiencies, because they do not have to worry about what to grow, how to grow, and where to sell to. And coming to your point, we handhold the farmer with the agronomy service that we provide. Through a combination of technology and human intervention, our agronomists work closely with the farmer at every step in the crop production life cycle, right, in order to ensure that what is happening in the farm is as per plan. This ensures 2 things, right? So one is for the farmer, it ensures that the inputs, the money that he spends on the inputs will deliver the right quantitative output for the farmer, which we pick up. And for the consumer, what it ensures that it is a contamination-free, high-quality produce. And through a greenhouse, we are able to sort of mitigate a lot of the natural environmental conditions and pests that can affect an open field crop. And therefore, a farmer is assured of a predictable output, and consumers who buy from us are assured of the same quality throughout the year. And in terms of the quantitative impact that we've created, on an average, our farmers see 30 to 50% higher yield compared to what they were getting prior to our intervention or prior to them becoming a part of the network. Right, and the 3 levels of inefficiency together is what actually sort of plagues an average small landhold farmer today.
All right, let's now talk about your recent funding. You raised $12.5 million as your Series A funding round. The round was, of course, led by Ivy Cap Ventures along with your existing investors. You plan to expand operations in South India, of course, barring the major cities that you're currently present in, and strengthen your technology stack. If you could elaborate on these plans, and if you could also share timelines.
Yeah, so I think over the next 6 to 12 months, you'll see us increasing the network of farms that we are managing. From a demand point of view, we will continue to remain focused on Bangalore, Hyderabad, which we've been operating for over the last 1+ year, and Chennai, which, as you said, we recently launched about 3 months back. So in terms of the consumer base, we are at early days across all of these three cities, and we want to go deeper in terms of the number of consumers that we serve. However, with the increasing consumer base, what will definitely expand by 2x to 3x is the number of farms that we manage or the number of farmers that we engage with. In terms of the areas of investment, I think the technology adaptation in this sector has stopped at the farm gate, so to speak. So we will be leveraging technology across the farms that we manage, across supply chain, and also technology on the consumer side in terms of our app and website, in terms of tailoring our product in tune with the consumer's consumption pattern or buying behavior. So technology is the core investment area over the next 6 to 12 months.
Okay.
Geographically, it will be Bangalore, Hyderabad, and Chennai. And obviously, as a brand, we want to be better known than today, 12 months down the line. When it comes to fruits and vegetables as a category across these three cities that we are
all right.
in.
Okay, Avinash, consistent high quality and sustained availability are the two key factors to win consumer trust. If you could talk to me about your end-to-end supply chain model, how are you ensuring quality and availability? And also, if you could take me to the platforms where one can buy the produce, who have you partnered with?
More than 95% of the business comes from our app and website. So consumers can either log into deep-rooted.co or download the Deep Rooted app from the app stores, and they can buy the produce, consumers in each of these three cities. In terms of the end-to-end supply chain itself, I think fundamentally where we have tried to differentiate is to take ownership across the entire supply chain, right? So in terms of how the produce is grown, as I said, we manage that part with our technology and human intervention. In terms of the physical supply chain itself, we pick up the produce from the farms that we manage. We operate a centralized warehouse in each of the three cities. The challenge with perishable produce is multiple exchange of hands results in lack of freshness and the produce losing quality, right? So what we've removed is all of the traditional intermediaries, middlemen in terms of people and infrastructure. We pick up the produce from the farm, we bring it to the warehouse, we do quality check, we do packaging, and then we deliver to the end consumers. Of course, in terms of logistics, we partner with service providers, but the ultimate ownership of the supply chain is end-to-end. And that plays a huge difference in ensuring consistent quality and
timely delivery. Yes, Avinash, if you could quickly talk to us about the revenue model. What is the road to profitability looking like? What are the models that you've devised for yourself? And also, how many acres of farms are you currently managing?
So we are managing about 1,500 plus acres of farms across Bangalore, Hyderabad, and Chennai. Our business model is simple. So we are not a platform in the sense that we are not just connecting the farmer to the consumer. So we buy the produce from the farmers that we work with, and then in turn we retail it to the end consumer. So that way it's a simple model, so to speak, from a buy and sell. In terms of the profitability, that's the aspiration over the next 6 to 12 months. That in Bangalore and Hyderabad, which are our two older cities in terms of vintage, we intend to achieve operational profitability. And Chennai is a city early in the day, so it will be a city where we'll be anchoring on growth expectation.
Okay, 6 to 8 months for operational profitability. One final question before I let you go. As you expand, you plan to hire across marketing, technology, and business functions. Is this hiring going to be across all functions? And also take me through the future growth targets, both in terms of expansion and revenue.
Yeah, so I think we've grown about 4x over the last quarter or two. I think the idea is to continue to maintain that growth momentum over the next 6 to 12 months, as I talked about. And in terms of hiring, yes, I think marketing, technology, business, and operations are the key roles that we are expanding the teams in. And yes, this will be across all the cities that we are operating in. I think in terms of the farm acreage that we'll manage, I think that will grow probably much more than the revenue, given that the supply planning takes into account a lot more consideration. So from some 1,500 acres, we should be at about 4,000 to 5,000 acres over the next 6 to 12 months.
All right. And we wish you the very best for all your growth plans. Many thanks, Avinash, for joining us on Startup Street.
Thank you so much for having me.
On that note, it's time for us to head into a quick break. Coming up, we dive into Elevate's maiden fund, through which the company plans to bet on growth stage ventures. Stay tuned.